Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We are doing this from the Nebraska State FFA Convention. The 95th convention underway in Lincoln. Have had a great opportunity to talk to a lot of kids who really have a positive attitude when it comes to the markets. So maybe they haven't looked at the markets as deep as we do. Brad Kooima joining me today with Kooima Kooima Varilek out of Sioux Center, Iowa. I mean, when I talk to some of these kids, Brad, they're like, oh yeah, we're really excited. We're pumped about this cattle market. But then you made a comment to me this morning that you came to work in the back of a cattle trailer. So, there's got to be an interesting story to go with that in the markets.
Well, there's a lot there. Hey, thanks for having me on. Yeah, well, the stock trailer reference is hopefully not a jinx, but that's Brad Kooima's smart aleck way of saying his horns are so big that they won't fit in his pickup to get to work. So you got to put him in a stock trailer. But isn't that awesome? I was going to follow up a little bit. For me, the FFA thing is a tremendous program that the kids, if they're willing to extract, there is a pile of life skills that'll serve them well for their entire lifetime that they can get from that. So good for you for being there and supporting it, and good for them. And they're right. I think they should be friendly cattle. So that's good. Give them some encouragement, right?
Yeah, they are. I mean, so many kids I've talked to said, hey, I want to come back. I want to feed cattle. I want to come back. I want to farm. I want to raise crops and feed cattle. That just kind of has been the theme with a lot of the kids we talked to today. So let's kind of dive into what you're seeing within this market this week. After coming off an interesting week last week, are we going to kind of have a dance going on when it comes to this cash market?
Well, it looks like it, but to me, it's, you and I have talked off and on about that one word, leverage, that we all seek. We haven't felt like we've had it for maybe since early 2015. Been exacerbated by some black swan events where we had absolutely no leverage whatsoever, became price takers completely, waiting for the time when numbers would tighten up slightly or which is really more the case this time so far, because we're not to the tight numbers yet, of where we've gotten ourselves so current. And part of that's because of the cost of gain. The big part of it is because the cost of gain had us pulled forward. And then on top of that, having in the north, at least a if not an all-time worst record weather, it's very close to it. Most of us would say it's the worst we can remember, in terms of rate of gain and, efficiency and all the rest. So yeah, I think that the buyer, the other side of this thing, knows he's got a challenge here to get cattle procured. Long-fed cattle, the last of the yearling crop, is basically what he's got to pick from. If he's looking for cattle that'll high yield and maybe be cleaner kind of cattle, like somewhere where it hasn't been all this snow, or someone with a confinement, those cattle are going to command top dollar. A lot of asking prices around 170 or even higher. Scuttle is that there's been a little 170 already. I don't see it getting reported on market news, but usually when I hear that usually is the truth. And I think the other thing about that cash question, Susan, is there's been, there's always some interest to buy some cattle forward by some of the packers. This time there's even more and more interest, I think, to do it all the way into May. And I'm getting quite a bit of that, actually. Talk about how much they're willing to do these basis deals above the June contract and stuff like that, which I think is also a tip-off of perhaps where the packer knows that he's going to have to get a little more aggressive than he would like to. So it's nice to have a little leverage on our side of the deal.
And can that really hold out into May, into more of the summertime, or is that just a little bit of a optimistic thinking on my part?
No, but it's a great question. I'm not sure if I don't have a definitive answer, of course, because I can't see into the future. But if you look at, so the market's function, right? It's theoretically, right now, the market, you look at June cattle at 159.65, and let's say the market's 170, 168 to 70. So the futures market's telling the producer that, hey, it's going to go lower. The futures market are $10 lower than today's cash. So the futures market's going to, warn the seller theoretically that I better sell cattle now. Okay. So he does, maybe a little bit quicker than he wants to. Cost of gain still really, really high. Corn is still over $7 most places in the bunk. And so what that does, though, as you keep pulling cattle forward, it extends that good time much longer and much more beyond than anybody would expect it to. It's the exactly inverse of when we're backlogged and we're not current, and go, well, if we just sell some, if we'd really get busy and sell cattle for a couple of weeks, we'd get better. It takes forever, so, but the other side of that's true, the reverse that's true too. So I don't want to sit here and say, well, it's going to go straight up until 4th of July. Of course that's not going to happen. The two things to watch, in my opinion, are slaughter level, which has been great. 127 again today and yesterday and the day before. That's telling you the packer still got margin, still wants to put blood on the floor, still wants to kill cattle. The other thing to me is going to be, let's just say hypothetically that you'd get a negative grain report on Friday. And I don't know if it's going to rain or not, but let's get down the road 45 days. Our crop gets off to a good start. We got a lot of acres. If we would take this price of feed way down, I think that also would be a little risky, because that would, or the chance then would be that the producer might say, heck, I'm going to feed these cattle a little longer now. And then you lose that, but that's way out there on the horizon. For now, I think we got 30 to 45 days of where we ought to be in, barring some kind of black swan deal, we ought to be in nice shape.
So can we call the weather a partial black swan? I understand there's more weather front moving through, bringing more snow to the Dakotas, Minnesota. These guys have had enough snow for the winter. Has caused for some stressful for the cattle. Do you see that weighing in on this?
That's a great question. And I thought today, for the first time, I thought the market traded a little bit of that stuff today. And I'm talking about the deferred. For instance, next December cattle was the strongest live cattle month. Next December, 95 higher. Next August feeder cattle, up 205. Almost like they're talking about a calf crop thing there, right? And you're correct about the people across the Dakotas. I've got more than one, obviously associate out there, and a couple of very good friends. They are so sick of it that it's hard for me. I don't even want to ask them how it's going. It's there's a motel that I've stayed at in Napoleon, North Dakota. I got a picture of it. The snow is as high as the roof. Are you kidding me? The thing I thought today is, I think, as you referenced, if these next two turns that are coming through at a time when you couldn't have it, the worst time for a cow calf guy, because he's calving, so yeah, I think that they're even talking about some worry about death loss and some very inefficient times for the cow calf guys, and that's why the back end of the market was so strong today, I think.
All right. Well, we've got a couple weeks of holiday celebrations coming in, and then we hit official grilling season and Mother's Day. So hopefully we get some more positive beef movement and some positive numbers when we get a chance to talk next week.
Works for me. I would expect demand would improve, going to that time period. Almost always does. Going on Mother's Day, right? Now you deserve a New York strip steak, right? That's going to be what I. Of course.
Okay. Thanks for joining us this week, Brad. Well, that's been this week's Cattle Call as we talk to you from the Nebraska State FFA Convention. I'm Susan Littlefield. Oh, don't want to forget, commodity futures and options do involve a substantial risk of loss not suitable to all investors. Got to get that in. And that's been this week's Cattle Call on the Rural Radio Network.